Cyprus new audit requirements for year ends 2022. The Income Tax Office and the ICPAC, the regulator, and the government, of course, have passed a law where they say that the audited financial statements of small companies do not need to be audited. In other words, abbreviated financial statements can be submitted to the registrar of companies, and the tax return of the company can be submitted without an audit being conducted. There are laws and criteria, of course. I will quickly tell you that this applies for companies, for small companies with turnover of less than 200,000 euros and net assets, total assets excluding the liabilities. So you take the balance sheet debit side of more than 500,000. But what does this really mean to you guys? Does this mean that you will be paying less to your auditors? Does this mean that you can get away with it? What does it mean? As an audit and assurance firm, our position is that we will still be doing our job as expected, because the tax return of the company is quite complex and cannot contain any mistakes. Therefore, even though some paperwork with regards to the audit will be abandoned from our firm, the actual testing will not, because simply we cannot produce accounts that do not present a true and fair view. We are an audit and assurance firm, regulated. We have clients from all over the world. I cannot simply sign off anything that doesn't stand. So it doesn't really mean anything to our clients, because we will be doing the same work. And of course, something very important, the taxman will know whether the financial statements have been audited or whether a very fast review was conducted by the auditors. If I was them, I would of course scrutinize all the companies which did not proceed with an audit to save money, and they have proceeded with a review. If they wanted to save 200, 300, 500 euros or 1,000 euros, then I'm sure they must be saving a lot on undeclaring a lot of income, etc. So let me check them first, and then I will move on to the audited ones, because the auditors, when they conduct their work and when they calculate the tax for each company, they do it very thoroughly, and they are responsible against the law for it. They are regulated, they have the necessary staff and employees to do so. So it's very unlikely that the Income Tax Office will find any discrepancies during a tax computation review of an audited company versus a tax computation of an abbreviated review of the accounts, of the bookkeeping effectively of the company. In a nutshell, let your auditors continue to do what they were doing. Maybe they will not fill in lots of unnecessary information for the audit, but let them do their detailed work on their testings. Let them make sure that your income statement is correct, your balance sheet is correct, your tax computations are correct, because you need to review your business and you need to make conclusions based on correct information. And this entails a more thorough work from your experts on your balance sheet items and, of course, on your income statement. Your decisions should be based on your expectations and, of course, on your history. And your history is what your audited financial statements state, and not what an abbreviated review of bookkeeping is stating. This is what serious businesses do, and this is what we will do with our clients. Thank you for watching, and stay tuned.